All right, traders. It's time to start the webinar. My name is Sean Kozak. I am the CEO at Tickblaze, and on behalf of all of our team, I want to welcome you to today's presentation. This is an automated algo launch. We are going to be launching this product into the marketplace, and what's the strategy is about automating divergence, and we're going to be looking at automating regular divergence, hidden divergence. But what we've done with this trading system is we were able to take a completely different approach to robotic trading. One of the things that happens in prop firms, and when you're trading for prop firms or predominantly day trading or scalping the markets for um, accounts with, say, trailing drawdowns or anything that is really risk centric, meaning that's really, really focused on tight risk management and making sure that you really don't have a lot of breathing room to play with, right? We see that in prop firms a lot. They don't really give you a lot to work with. And so when we built the automated divergence algo, one of the things that we were able to do is we were able to take the proven frameworks of the strategy and put custom trade management into the way in which we manage the trades. So we're going to show you how we manage this type of trade because it's very different in how we say manage other types of strategies. And I really think this is what everybody's been wanting because the way in which we trade this trading system is not like the other strategies. And it's also where we can capture very, very large runners and have very, very, very tight risk. And so, as a day trader, small stops and big profit targets are what we always look for. And this is exactly what this system does. Now, before we get into the actual strategy, a couple groundkeeping rules. We are recording this event, so we will get you a recording. If you have any questions, type them in the chat box. I'll do my best to go through it, but if I can't get to it, we'll go over it at the end of the presentation. And like I said, if you want to watch the recording, I think you should because there's going to be a lot of golden nuggets that we go over as we go through the presentation. Then at the end of the event, because it is a launch event, we're going to give away some software, hook you guys up with a huge deal. And we've also got some extra coupons and discounts for anybody that joined us in the trifecta boot camps or any of the other velocity boot camps that we did for training. Okay. Now, because we are doing an event on trading in the financial markets, please make sure that you read and understand and accept the disclaimers. So if everybody could just type a Y in the chat box that you've done that and that you understand and accept the risks and know that I'm not your advisor and I can't give you any guarantees, well, that's great. Fantastic. Excellent. Thanks, everybody. Appreciate that. So, one of the things I want to talk about is something that is really true to my heart. I've been in this business since it started in terms of like the whole wave of technology and selling software and prop firms and just I've been around for a long time. And I know a lot of you guys have too. And one of the things that I've seen throughout the industry, and I like to talk about that here today, is that there's a lot of people out there that are just putting videos together or selling a course, and they really don't have any track record. They don't have any experience or any of that nature. And when it comes to automated trading, there's no bullshitting, right? Like the strategy is going to tell you if it's profitable or not. You're going to run a back test and it's going to tell you if it makes money or not. You're going to be able to trade it and you're going to be able to see if it does what it's supposed to do. And I'm here to just give you a promise that I think is necessary in this space is that we don't have any room for fluff, for snake oil, or any type of nonsense around does the trading strategy work or can you show me that it's profitable? We lead with that because that's exactly what this is about. We're in the business of trading. Trading is about making money. Trading is about results. And there's no room for anything other than that, right? So, what I'm going to do today is we're going to really spend a lot of time on the trading performance. Why? Because the performance of an algo is everything that we're using an algo for. We want to use the data to give us the information to trust it. We want to use the back testing and the performance to make sure that we know that the strategy can give us an opportunity to make money in the future. And then we're going to show you how to really capitalize on the edge that it provides. And so if you see this graph here, I want to ask you guys a question. With this equity curve and this picture, what do you see that stands out? Like what do you guys see in the image here to the right? You can see the green, you can see the bars, but what stands out to you? I want to just ask you guys straight up because there's one thing in particular I want to talk about. Okay, Dan says the wins are way bigger than the losses. Very little drawdown, no losses, great win-loss ratio. You guys are seeing it quick. Good. Exactly. That's exactly it, right? That's exactly it. So I've built a lot of strategies, more than most care to admit, and I've traded a lot. And I know manually this type of approach works because I understand how it works. I understand what we're looking for. I understand the context. But one of the things that I wasn't able to do manually was I wasn't able to identify the best trade management. As a trader manually, I wasn't able to identify the best outcome for should I trade for one target, two targets, three targets? Should I have a tight stop? Should I have a big stop? Algos allow me to do that. And so when we built this trading system, it was super, super exciting because I was able to learn the best way to capitalize on something that I already knew was very profitable, but I was able to take profitable and turn it into incredible. And I'm here to share with you guys. I very rarely get impressed because I've seen it pretty much everything out there under the sun. I've seen every strategy and I've seen tons and tons of great traders, but very, very seldom do I get, or very rarely do I ever get a strategy that kind of like makes me take a second glance and say, really? Like, wow, okay. So now we've got it. So much that I'm excited because we're about ready to run live rooms with algos and we're getting ready to put together a program with automation. And this is one of the trading systems we're going to be leading with in those programs. So I'm super, super excited to trade it, to share it with you. And I'm here to tell you that this one impressed me, which is very, very difficult to do. So hopefully you're going to see why in just a second. Okay. Quick agenda, super easy. Paul says, did you guys run with this in actual account? Yes, we did. And I've actually traded it manually, Paul, and I've actually traded this in front of an audience manually for very large profits. Yeah. So, absolutely. Um, and we also ran tests and we ran scenarios. We have a couple of different entry patterns, which we're going to show you, and we're going to get into that, right? So, we're going to go through this. We're going to talk about automation. Guys, I can't get to the questions, so keep them to yourself until after the presentation, okay? Um, Automation. We're going to talk about manual versus algo trading. I want to talk about the algo engine because it has everything to do with the trade management and the profitability of the strategy. I want to talk about the fact that this strategy was made manually first and then we brought it to an algo. I want to talk about the templates. I want to talk about the entry patterns because there's two ways to enter the trade. And I think once you understand the edge behind that, you're going to truly understand why this is such an amazing way to trade. We've built optimized templates, but we've also built them to use them with different entry patterns. So we're going to talk about that. And then what we'll do is we'll give away some free licenses, and then we'll ultimately show you the launch pricing. And we've already built some special discounts for everybody that's been in our boot camps. Okay, so super exciting. So I want to talk about data. And for those of you that have been in my presentations for before, you always see me talk about this slide. And I'm never going to change that. So just bear with me because for those of you guys that are new, I think it's super important that you understand what I'm about to share with you. Okay. In trading, there's two ways to trade. There's manual. Okay. There's discretionary traders. Okay. There's discretionary or manual, right? And then there's algo. Okay. And the difference between them is the data, right? Like we know there's a lot of problems with manual trading. Many of you are going to relate with manual trading in and the struggles that happen, right? Like I know for a fact that I miss trades because I'm not fast enough to see the entry. I know for a fact that sometimes I don't log my trades enough, or I don't keep enough track records, or I know sometimes some of you find it you miss trades, or you ultimately can't follow along when you're in a room and the instructor takes a trade and you can't really figure that out. And I also know that there's a lot of errors that can be made when you're a trader manually. How many of you guys would agree with that? How many of you guys can relate with the struggles of manual trading, mistakes, errors, missing trades, execution time? Like if you're trying to scalp or if you're day trading, sometimes you miss the signal and you can't get it right. Um, that is a big problem, and it's also a big problem, especially when you're trying to scale big size. Hesitation, fear, not pressing the button, emotions, all of that stuff. And guys, I'm here to tell you that that's never going away. Like if you're sitting there putting that pressure on yourself, it's not happening. You're always going to miss trades. You're going to make mistakes. It's part of just being human, right? It's just part of the realities. But when you move over to there's a line in the sand, right? There's this gray area that, once you move from manual to algo, a few things happen. Okay. First of all, the efficiency just increases. Like you just become better at execution. The accuracy of trade entry improves because you're mechanically able to program a strategy to enter for you and actually trade. You're also able to create a more mechanical approach to entry and exit, right? You're not guessing, you're not changing the plan midstream. You're not basically moving your stops and targets because your brain gets in the way and starts basically doing things that you know you shouldn't be doing. But when it all boils down to it, the only thing that really matters to me is this one right here, the data. Most traders that are trading over here on the manual side, okay, you don't have a large track record. Like even for those of you that do log your trades, I know you don't take logs of hundreds of trades and compare your results. I know for a fact that no matter how experienced you are, you're not sitting there documenting 100 trades and then studying the performance and the mechanics and how you could improve it. You can't. There's just no way. Like as a manual trader, you're not going to trade 100 trades and then go back and then retrade those 100 trades and change the differences in the rules. That's not possible. Automation and using the tools that we've built provide the foundation for us to build entry models. We can choose how to enter the trades. We can choose how to exit the trades. And what ends up happening is that we can backtest them and we can optimize the performance, not to try to curve fit things. Curve fitting is your enemy. If you're trying to curve fit a strategy, okay, by tweaking it to the point where all you're doing is trying to change the way the strategy performance looks. Like if you've got a strategy and it's going like this and then down and like this and then down and that, and all you do is optimize so that it just goes like that, well, you're lying to yourself. You're basically curve fitting the strategy and you're doing things that are just going to cause the trading system to just blow up. Like you're just going to fall flat on your face in live markets. You're going to eat a shit sandwich and it's going to hurt. You're going to basically blow out all your accounts. You're going to fail your prop accounts. And what's going to happen is things are not going to end well for you. Okay. But when you can take a strategy and you can actually get it to do this properly, you can actually get it to go up and actually do a healthy equity curve, and you are able to maintain the stability in live trading, two things that are going to be important. Okay. Your winning percentage is going to be important. Your win loss ratio is going to be important. Your drawdown is going to be important. And then your profit factor is going to be important. Your risk and reward ratios are going to be important. Those things right there are what matter. And I'm here to tell you that all of this sums up into one word: belief. Okay. The only way you're going to believe the strategy is if you see it working, if you have a track record. How do you have a track record? Data. Nobody in here wants to trade a strategy that you have no evidence that it makes you money. That's the problem. Okay. And so what I spend all of our time doing and what we do as a company is that we prove the strategy that makes money, and we prove that it makes profits, and we prove that it has an edge. And then we use that data to ensure that we have something worthwhile. How many of you guys would agree that if I could show you two trading strategies, one of them over here has a big question mark, and this one over here is going like this, which one are you more likely to listen to as I show you the presentation? You tell me. Are you going to be the guy? Are you going to want me to talk about something that I can't really show you a proof in the pudding? Or are you going to want me to show you that, hey, look at the strategy that has an edge. Here's the proof that it has an edge. Which one are you going to believe more, guys? The discretionary framework or the algorithmic framework? Type an A if you believe in algos after what I'm just saying. It's all about performance. It's all about the edge. It's all about building a belief system around data. And unless you have the data, you don't really have a business. And I'm here today to tell you right now that I have a business in a box. And I'm proud of that because I've been a trader trading this manually. And for the first time in a very, very long time, I've been able to prove the efficiency and increase the efficiency and optimize the trade management. A lot of the other strategies that we've built, I haven't been able to improve the strategies based on trade management tactics. This strategy, what I've been able to do is I've been able to prove the efficiency through better trade management, which means I have losses. Okay. The strategy does take losses. Okay. But they're so tiny. And then the wins, I have small wins. I have medium-sized wins. I get some bigger wins. But this strategy has huge freaking wins, like big, big wins. But it never changes the small size loss. Like my loss is so small. And every time we normally trade trading systems, a lot of times you'll see that we'll go for a 0.5 R multiple, right? Or a 0.75 R multiple. This strategy allows for us to go for like large R multiples with very tiny stop losses, but still keep a really high win rate. That's hard to do. It's really hard to get north of 60% and it not blowing up or like not being able to trade it for a prop firm. And I've been able to, for the first time in our history of building algos, be able to take what we call ratchet risk management and improve the trailing stop methods for the trading system while keeping the stop losses small. And to me, that is an act of efficiency. And I'm very proud of what we've been able to accomplish. And the end result is profitability. Very, very high profitability. So why would we want to automate? Because I know that this strategy can produce a profit. And the way that it does that is by efficiency in the stop losses and the target ratio. Now, many of you may or may not know what divergence is. Okay. I built an ebook. Okay. I built an ebook. That ebook is here. And what I did over the course of an ebook is I built an ebook that talks about divergence and it breaks down the strategy of the divergence. It breaks down like the different types of manual trades and like the different ways in which trade strategies can be used for manual trading divergence and then basically hidden divergence and regular divergence, etc. But all of you guys, I'm going to give you this. Would you guys like this? This ebook is an actual book that I've wrote on divergence, using divergence for trend trading. Everybody here can have this. I'm more than happy to give this to you guys. But what's really more powerful is that we traded this manually. And what we were able to do is build an algo on this. And that's what this is, like a little tidbit of this. And most traders learn the divergence with regular divergence. Okay. Most of you, 99% of traders learn regular divergence. Very few people know about hidden divergence. And hidden divergence is difficult to see manually. It's really good that we can generate a tool that shows you hidden divergence. But hidden divergence is where oscillators are not lagging. In fact, oscillators are leading. And we're going to talk about that today, but we're going to show you how this software automates this. We're going to be automating regular divergence and hidden divergence so that you don't have to see it. Here's an example of a manual regular divergence. And this is what the software is going to do, okay? You're going to have situations where the market's going to come up, okay? It's going to pull back, making lower lows, but then the oscillator is going to make higher lows. And this is normal. Most traders know this. Most traders know that that's bullish divergence, right? You're going to have the oscillator here showing you a little bit of a disconnect. And then as a result, the software, the strategy would be a pullback trade, right? That's how regular divergence works. And when you look at bearish divergence, same thing, right? You're going to see that the software gives you, or you'll see the market goes like this, higher highs, and then you'll see that the oscillators makes lower highs, and as a result, the market goes down for bearish divergence, right? But what most people don't realize is hidden divergence. And hidden divergence is where you're going to have the market go making higher lows, okay? So the market goes like this, but then you ask yourself, right, how does the oscillator go the opposite way? Like, how can the oscillator be going lower? Like, how can the oscillator go lower when price is going higher? Like, how can that be higher and the oscillator is lower? In these situations, it's when there's an explosive move is about to happen. And hidden divergence normally is the first leg of an impulse leg. Hidden divergence is normally right after an EMA cross. You normally will get an EMA cross, and then all of a sudden, bam, you get an explosive move with the hidden divergence. And I'm here to tell you that hidden divergence is one of the most powerful things that I've ever witnessed as a trader. It absolutely has its place in that I've seen it work exceptionally well on Renko charts because of just the way Renkos work with the RSI oscillators. I really do believe that using the RSI and Renkos together create a powerful combination in this. And you're going to see the same thing. Like, how can this, like, you got a bunch of pullbacks here, right? But this one here is not created equal. This pullback right here has different power behind it. And you say, well, how? Well, this is making a lower high. Like, you can see here that this is a lower, like this is a high right here, and this is a lower high. Well, how can the oscillator be going higher? You say, well, how can I be going like this? Okay. But then the oscillator going like this. That's the complete opposite of what everybody's been taught with divergence. And you're going to get powerful trades. Now, our software does both. Our software does both. And you're going to say, well, have you ever traded this? Yeah, I've traded this a lot. These are some of my personal trades. One of the things that I've done as a trader is I've traded order flow. I've traded trend lines. I've traded momentum, market profile, volume profile. I've traded breakouts. I've traded everything, like everything you could possibly imagine. I've traded it. Okay. And to this day, I believe in my heart, in my soul, that divergence that leads structure changes is one of the most powerful concepts to the entire way in which you could ever trade. And what I started doing is I started trading this a lot, so much that I've actually traded this on big size, big accounts for prop firms. Okay, not for a prop firm, managing prop firm capital, like big books of business. Okay, and what's important here is that I've traded this strategy with size, like big size, and it's one of the strategies that I believe you can scale efficiently with size because you get to plan your trades in advance. You get to see the strategy work before you execute. You can see the market setting up. And this is one of the biggest problems for traders is traders can't see the market setting up in advance. And what's the problem is a lot of traders, the only time traders can trade set and forget setups is like a levels trade, right? Normally you'll trade like supply or demand or support or resistance and you have a level, right? And you can see it. So you put a pending limit order and the market trades down and boom, but you're always fighting the market. As a levels trader, you're always fighting against the trend. You're always going against the trend. And normally momentum trades or any of those types of trades, you're always late because you never get in before it happens. You always miss the trades. So it's like, okay, one strategy, you're always fighting the market. The other strategy, you're always late to the party. This strategy is one of the only things that I've ever personally been able to identify where I always can see the trade in advance and I'm always going with the market. You can see this is a trade divergence sets up and I'm able to trade a trend break setup, but it's actually divergence leading a break of trend. And so I'm actually combining divergence with the break of trend lines in the direction of the market. Here's an example of doing the same thing. The market sets up, I get divergence, but what does the divergence do? It leads to a break of trend. Here's another example. I get divergence. It leads to a pullback structure change. Here's another example. I get divergence. It leads to a massive trade. Here's another example. I get two different markets siding up at the same time in a trend, both of them leading with divergence, and then both of them basically leading to a breakdown or a structure change. Here's another great example of me using divergence now with the software. I started doing this manually, and then we built the indicator. Now, here's a great example. I'm looking at a higher time frame chart. I get a pullback, but here's the cool part. I get a low, it sets up, I get a higher low, but then I get a lower low in momentum. This is hidden divergence. Does everybody understand that? This is where the brain starts playing tricks with you. It's like, okay, how can you be going higher, but the oscillator is going lower? Normally, oscillators are supposed to be lagging in nature, right? No, that's not true. When an oscillator is not lagging and it's doing this, it's giving you a clue that something magical is about to happen. When you get hidden divergence or when you get regular divergence in the context of a trend, you get the best of both worlds. You get to trade with the market, but you also get to use data, aka divergence and price, giving you a context that is about to give you a favorable move. Divergence in the context of trend trading combines two things. You're technically taking a reversal, but you're combining it with trend. And that's the key, right? Like this is a trend trade, but divergence is a reversal tool. So what you're doing now is you're using reversals in the context of trend trading, which gives you the power of both non-directional components in directional markets. And this is where experience is. I'm telling you as a 15-year trading veteran that you don't get anything better than this. Like nothing can be better than taking reversal divergence infrastructure and putting it in the context of a trend. Why? Because you get the power of reversal data to feed pullbacks. Then what ends up happening is that you get days like this, right? Here's a great example. When I take that information and I combine it with the right knowledge of trade execution, here's a day where I did 25 grand. Guys, you've seen me trade. Many of you seen me trade. Like last week, I took 21 grand or 22 grand trading order flow. This is a great example of me taking 25 grand trading divergence. It's not necessarily me. It's the strategies that I'm showing you that can be traded properly. And in my experience, there's never been a trading system that I've ever seen that comes close to what I'm able to do with divergence, the way that we trade divergence. Okay. And what I want to do is I want to share with you that I traded this in front of an audience, and that audience literally watched me do every single execution in real time. And here's the kicker. Okay. It's not easy to do. So when I realized that, hey, a lot of traders are not going to be able to do this all the time, I knew then we had to automate it. But the benefit of me automating it is I get to take this data, which was incredible, by the way, and I get to improve the efficiency. So what did we do when we automated it? Okay. Well, here's the cool thing. You have nothing to optimize. I'm going to share that with Chad saying this sounds like it might be hard to optimize. On the contrary, there is no stops and targets. There is no targets. Normally, when you optimize, you have to optimize for stop loss and then targets. We don't do targets. This is the whole part of this, Chad, and I'm going to share with you. This is what I want to share with you. So here's a bunch of testimonials that a bunch of traders wrote into me. I actually have the screenshots. So I can send them to you. But let me share with you what I did. Okay. So let me do this. Okay. Normally, when you have a strategy, you have the signal. Okay. Normally, you have to have the trading signal. And the trading signal can be simple. Okay. Or it can be complex. Okay. This is important. You pay attention. This is the important part. Okay. The second thing is then you have the stop loss. Okay. And it can be small or it can be large. Okay. Then you have the target. Okay. And this can be 1 or it can be +1. It can be multiple. Okay. So with divergence, the entry is very, very easy. It's very simple. There's not a lot of moving parts. There's not a whole lot of stuff. Price and oscillators do one thing, and it basically gives you divergence. Okay. With trading, most strategies, you could have small stops, large stops. You could have whatever stop loss you want. But let me ask you a question. If you start to reduce your stop size, what happens? If you start narrowing down your stop size, if you start making it smaller, what does that do to you guys? What do you think it does? If I start having a small stop loss, what happens? More losses, Gus says. Okay. More losses. Okay. That's one comment. Anybody else? What happens? Exit too early and you lose profit, get kicked out. More misses. Okay. Kills all the trades without a profit. Yeah. Your R goes up. Okay. Well, let me explain something. When you decrease the stop size, if you're on a small time frame, the noise is heavy. You're going to get stopped out all the time. Okay. It's really hard if you have a small stop. So everybody has a large stop loss. But when you have a large stop loss, guess what happens? You can't really get large R multiples. As you increase the large stop loss, it becomes harder and harder to get a 2R or a 3R or a 4R trade. As you change your stop loss dynamics, you're also in effectively putting strain on your R multiple. Now, I'm saying this as a system specialist. The stop loss, if you drop the stop size, you increase the opportunity for R's, which is what we're trading for. We want large R multiples. But what ends up happening is that when you drop your stop size, you end up getting kicked out, which means your signal needs to be super, super, super strong in order for the strategy to work. What we found with this trading system is the signal was super powerful. We really had a small stop loss and we have zero targets. You say, well, what the hell does that mean? Because of the nature of this trading system, okay, because of the nature of the trading system, if I get a market coming down like this, right, boom, and then I get a signal right here, what we're able to do is we're able to take a very, very tiny stop loss because what we're doing is when the trade kicks off, okay, we don't have a target. We do not have a target. What we do is we don't cap the upside. But here's the thing, in certain conditions with certain bar types, you can't do this with time charts. You can't do this with volume bars or tick charts, but you can do this with Renko charts and you can do this with range charts. If the market's going to pay you, meaning if the market's going to give you huge, huge profitable trades, why would you only take this? Like, yeah, okay, you could take this. Great. I can get 1-to-1. But if the market's going to give you 4-to-1, why would you not take it? You have no way to know it's going to give you 4-to-1. If you try to optimize a strategy where you optimize for 1-to-1 or 0.5 or 1.5 or 2-to-1, you're really just optimizing for that target. You have no way to capitalize on max favorable excursion. Max favorable excursion means if you study all of your trades, you get a chance to see how much each trade went in your favor after the trade was exited. Well, if you study MFE, you can see, wow, maybe I'm trading for 1-to-1, but there was so many times where the market gave me 5-to-1. Well, you're missing out on a whole lot of money, my friend. And so what we decided to do was, because of the nature of this system, we implemented a trailing stop method that allows us to squeeze the market. And what'll happen is you might get kicked out a couple times, but when the market rips, you capture the entire leg. And I'm here to share with you what this does is it keeps your stop losses small. This allows you, this is your stop loss, okay? This allows you to have equal wins, slightly larger wins, bigger wins, bigger wins, huge wins, gigantic wins. You never ever you have unlimited upside. You have unlimited upside to how you manage the trade. but your stop loss is always capped. We trade for a capped risk and you have unlimited upside. So what happens is there's going to be some days where the market just gives you this. Great. Those are the days where you make money and you're great. There's going to be days where the market gives you this. Great. You make more money. There's going to be days where the market gives you this, but we never cap it. We have unlimited upside. So depending on condition, this strategy adapts to the condition. And this is why I'm so proud of what we've built, because you cannot do this with certain types of strategies. You can't do this with certain types of bar types. It can only be done in the context of Range and Renko, and it can only be done with the way in which certain signals are created. How many of you guys would love to have huge win rates, big winning percentage, plus large R multiple trades? How many of you guys would love a high win rate and like a 1 to 2 to 1, 3 to 1, 4 to 1? That's huge. That's the point. That's really the point. Very hard to accomplish. We did it. And I'm here to tell you that like it's probably one of the most exciting things that I've ever seen unfold. In fact, so exciting that even my head of DevOps, the gentleman that works with me on all of the trading systems, Jeff Zimmerman, I'm going to bring him to a panelist right now because I want to hear his approach. He works with me. God bless him. He's literally one of the most important people that I've ever worked with. And he spends his entire day working with developers and working with testing systems. And Jeff, can you do me a favor? What can you just explain to the audience? I know I'm calling on the spot. Are you here right now? Can you just say something here?
Hey,
Yes, you
hey,
got.
Sean. Hey, Sean. I'm here.
What was it? What was the outcome when I came to you and I said, we're going to take a different approach with this system in terms of the way in which we manage trades? Can you share with me like the aha that happened for you?
Yeah, well, I mean, you totally flipped the script. I mean, we've been putting out a lot of systems, doing lots of optimization, sharing templates, and we get good results. We our general approach is to find a target that's maybe zero point 0.5 our multiple, maybe 0.75. We're lucky close to one. But that's always been our MO, and we've always had success with that. But when you did that boot camp where you did this kind of trading, and you came to me with this different way to do the optimizations, it's like looking at things completely differently. And wow, the what happens is, you get a little paper cuts here and there, little tiny stops, and then all of a sudden you get this one runner move, and it just wipes out the last five losses, and twice as 2 to 3 times as much. So it's
Yes.
a really amazing way to trade. It's put it in a nutshell.
It is amazing. Okay, thanks, Jeff. I appreciate that. I know that I put you on the spot there,
No worries.
but it's okay, Ben. Did everybody else hear Jeff? Did everybody else hear what Jeff said? We recorded it, Ben, so just go back and hear it. Everybody else hear Jeff? Type a yes. You got him? Okay, good. It must have been just your audio, Ben. So apologize for that. Just watch the recording. Um, so we built an automated divergence system. It automates everything. It automates the entry, it automates the stop loss, it automates the trailing stop, it automates everything. And this is what it looks like. And what's really cool is we have two ways to enter the trade. Okay. We have a bar close entry, and then we have a body break entry. Okay. The difference between the two is one, we're getting in at the close of the bar. So I was going to use a different. So this one here would be considered a bar close entry. This one here is a body break entry. So what's the difference? The difference is one is getting in when the bar flips. The other one is getting in as soon as we break the body of the leg. So this one here, you see the leg comes down, push, 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 push. As soon as we break the body, we enter the break on that. And what ends up happening is depending on the leg, like you'll see this leg right here, depending on price action in that leg, if we don't have a wick, like you see this wick that kind of came through here like this, as long as the market doesn't wick through on any of those Renkos, we can take the entire leg out of the market. And it really is dependent on the price action. We don't cap it. You'll see sometimes you'll take a bigger leg. You'll take a piece of the leg, you'll take a little piece of the leg. What happens is it's all dependent on price action in the way in which the strategy runs in the market. You'll see here, like take a look at this. Like this one here, we got an entry. This captured the entire leg of that impulse. This one here got an entry. It captured 3/4 of the leg of that impulse. This one here came in, took an entry. You'll see the wick that came into that candle. We take the whole leg of that market. So what's happening is that we're not sitting there saying, oh, we're going to trade for a 0.5 or a 1-to-1. If today's going to give me 20 grand, I'm going to take all of it. If it only gives me 10, I'm going to take 10 because we're going to let the algo pull as much out of the market as we can based off of what the market allows. We're not going to sit there and hold ourselves, oh, I trade for 1-to-1s and 2. No, I'll trade for a 10-to-1 if the market gives me a 10-to-1. And this is what's really powerful is that with this system, you're not going to sit there and say, wow, I wish I caught that move. This is the system that catches that move that you're finally saying, wow, I finally caught the entire impulse leg. And this is what we're trying to show here is that you now can do that. And what's really cool about this is that you really protect your downside risk. The stop size is so small that if the market doesn't explode right away, you're out. Like it's like you're not sitting there with the disease of hopium. Oh, I hope the trade works. I hope the trade works. No, this strategy, you get in, you take your entry, or it stops you out, right? Or it gives you a big profit. And I think traders gravitate towards that more. Like, how many do you guys find sometimes that when you're trading, you ultimately are in a trade and then all of a sudden you're like, oh man, like please work, please go to my target, please go to my target. I don't stop me out. You're sitting there with the disease of hopiums. Well, with this, if the strategy gives you a tight stop and an unlimited upside, you're really just going to let the trade do what it's doing quickly because if you're getting stopped out, you get stopped out quick. And if it works in a really, really big way, right? Now, Kevin's asking, is this similar to the ARC AI version for a Ninja Trader? Actually, it's not. There is similarities, but we changed the entry logic, which means it won't do the same. Unfortunately, the divergence algo on ARC AI on the Ninja Trader doesn't have the custom entry models that we put in. And the logic around the swing structure is very, very different, Kevin. Yeah, it'll have to be done on Tickblaze. Yeah. The hope and the pray method, not very successful. Exactly. Yeah, exactly. So here's some examples of like, here you'll see like this is like here, like look at this. Little teeny tight stop, target, right? Little teeny tight stop, right? And then all of a sudden, what ends up happening is you get opportunities like this, where as soon as you get in, little teeny tight stop, okay? And then look at that. Your stop is here, and your target is all the way up here. So you're like, okay, 1, 2, 7. So on the prior slide, you're like little teeny stop, little teeny stop, little teeny stop, boom, 10 R's. Like, there's nothing better than that. Why? Because you're now capping your risk at very, very tiny R's, and you're letting the algo give you huge upside when the market gives it to you. And there's nothing better than that. And you're not actually getting in the way, stopping the strategy from being more profitable. I can't tell you enough that traders, including myself, we get in the way of stopping our upside potential by having fixed targets, but not all systems allow you to do this. Okay. So here's a great example of the strategy. Okay. Now, this here is like this has a 2.7 profit factor. Okay. And the win-loss ratio on this is incredible. It really has high expectancy. And you're going to find that the way it works is you get really, really, really small losing days. Okay. And your winning days are just gigantic, like just gigantic. And there's nothing better than that. Like these are days, these are not trades. So Do you have a losing situation? Sure, once in a while. But how many of you guys would agree that this equation from these losses to those wins make a whole lot more sense? Like, how many of you guys would love to trade for something like that, where you're not sitting there having big losses, big losing days, big losing trades, where the losses are minimized, like super, super, super controlled? That's the whole point. That's the whole point. And that's by design, for sure. That's by design. We could optimize differently. Like we could have um, a strategy where we have big stops and big targets and all that, and that's fine. But I don't think you're going to appreciate this. One other thing that I really think is so powerful about this way of trading is that when you run it forward, like in forward testing, how many of you guys have ever found like your back test, okay, looks great, boom, 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 and then you put it forward and it just starts doing this? How many? This is it. Forward testing. Yes, that's the whole point, Michael. I think you're just hitting it on the head. What this is this. Our forward tests do this because of the nature of the trade management. Forward testing with strategies that have low R multiples normally blow up if you're not careful. Strategies with large R multiples and tight risk management keep going to the upside. So that's the whole point. And that's why I'm just so excited about this because for years, we always have to work extra hard to try to produce this not happening. Well, when you run this algo forward testing, because of the nature of the win loss ratio and the R multiple complex, the forward testing allows us to reap continuous results. And that's, I think that's the big question everybody wants to know is like, how does it work when you run it live? And my answer is very simple. When you have something that has huge dynamics for R multiples, running anything live that gives you that is a blessing, and not all strategies are created equal, right? And so what we did with the algo engine, for those of you that are new here and wondering what the algo engine is, the job of the algo engine is to run a bunch of tests. What we do is we test the strategy entry, we look at the signals, we look at the targets, we test the strategy trailing stops, the win loss ratios, everything. And what ends up happening is that our job is to try to produce higher profitability trading. And we take the signal, which is like 20% of the strategy, and then we run it through 80% of the testing. And what we found with the algo engine is everything was to do with the trailing stop. The trail stop is how we run this. We don't run the strategy with targets. We run the strategy with a trail stop. And the trail stop is basically how we squeeze everything out of the market. So you'll have trades that'll be a 1-to-1. You'll have trades that'll be a 2-to-1. You'll have trades that'll be a 7-to-1. Just depends on how the market unfolds in the impulse. And you're gonna catch huge trades, and you're gonna love this. So let's go through and show you some examples. Okay, I'm gonna play some trades here. You're gonna see that the strategy. You see this line down here that's plotting the divergence, and you're gonna see this. Like let's watch this unfold in real time here. We were recording this. Watch the entry. Okay, watch how this works. Okay, this is a bar close entry. So this one here enters on the bar close. Okay. Now this one here is using the old method. Okay. This old method is this is the stop and this is the target, right? We're just trying to show you that there's two ways to do this. The first method is the old style, bar close. Everybody knows bar close. You enter when the bar closes, you have a stop and target, and then you let the trade work. Now we're going to show you that. Okay. And you're going to see here, we ratchet the trail stop. You're going to see that the strategy is going to give you dots, and we're going to ratchet the trailing stop. And you can see now we have unlimited upside, right? Stop. You see that? So basically what it does is it kicks you out on the trade. Does this make sense? Even though you had a target, it kicks you out on the trailing stop. Does everybody understand that? This wick is what kicks out the trade. Now what we do is we go to another example, different type of scenario. This is a bar close short, right? Let's watch it. The algo does its thing. We wait for the bar to close. we get it. Now you see how we have a big target, small stop, big target. We're going to ratchet the stop loss. Okay, we're going to trail the stop. We're going to let the algo do its thing. We're going to basically wait and see if it kicks us out or if it keeps going. Right, we'll let the target go. We have a target in place. Wait and see how the market wants to run, how it wants to trail. There it goes. We just let it go and we just keep squeezing it out. And if it goes to our target, great. If it doesn't, it doesn't. We just protect the risk and we squeeze the market. We basically let the trade run, we let it work, and we see how it wants to unfold. And there's the target. See how it just takes a little bit out? It squeezes the market. You get the entry. It squeezes what the market will give you. Okay. Then what happens is you get what we call this is a bar close entry. Again, we're going to do bar close. We're going to show you, and then I'm going to show you the body break. The body break is how I choose to enter. This is a bar close entry, right? So we watch it. Give it a second to do its thing. It's going to enter on the divergence. The software does its thing. This is an example of, and I thought this was a short. It was probably a typo on the chart. Here's a great example of just a big stop and a big target. Okay. This is how everybody trades divergence. They come in, they get a divergence, they have a target, they have this. But the problem with that is that it leaves you exposed to two things. If you have a target like this and a stop like this, it leaves you exposed to two things. One is this trade could come back down and give back your profits. Okay. That's one problem. Two, if you cap your target here and it keeps going all the way to here, you only take 50% of what the market could have given you. Instead, you get 1R when the market could have given you 2. So two things. You leave your risk exposed, but at the same time, you cap your upside potential. You're basically saying, oh, the market said I could have $100 more, but I'm only willing to take 50. That makes no sense to me. If I'm sitting here saying, hey, take 500, but you only take 2, what the hell are we doing as a trader? Doesn't make any sense. Here's another example. This is the way I like to trade, okay? I like to trade body break methods. Body break methods are where I get to enter when the market's pulling back in these legs, okay? You can see this is what we call a pullback. When the market pulls back, as soon as we break the body of the Renko, it executes. Watch. Give it a sec. Look at this. Now, do you see the size of the stop? How big is that stop loss? Is that a big stop or is that a small stop? You guys tell me. We already know the answer, but I just want to make sure you guys are paying attention. Look at the size of the downside risk in that trade, okay? Now what we're going to do is we're going to watch this. You notice how there's no target? There's no target here. We do not have a target, okay? What we're going to do is we're going to say, I'm willing to risk a little bit, tiny bit, little teeny peanut. Then I'm going to remove risk immediately. So it's a free trade, which means you now have no risk. And now it's basically let the market pay to play. I'm going to let the market give me whatever it's willing to give me. Instead of sitting there trying to assume, look what we do. Yes, exactly. Small stop. It's half the size of the bar close stop. Twice the arm. Look at this. This is the way that we manage this. So let me ask you something. Would you rather trade the old way where you cap your upside risk, you have no downside risk protection, or you literally just ratchet when the market gives you massive flow, you take all of it? Look at the way it manages that trade. That became like a 9R multiple trade. And it's like, this is how we trade this type of system. Let's go here and I'll show you another example. Okay, watch this. This is the reason I want to end with this example. The end goal is this is going to show you 2 losses and 1 win and how we run this. Okay, watch what we do. Right, watch it. It's going to get in. The algo is going to get in. Okay, watch. So you see the stop? See how small it is? The algo is going to get you in. Watch what happens. Kick you out. So little teeny base hit, no problem. Little bit of a cut, little paper cut. Okay, perfect. There it is. And again, paper cut again. Why? Because it's designed to enter when the divergence is kicking off. Watch what happens. It enters again, tiny, tiny stop loss. And then all it does is it just ratchets. And then when the market flows, it squeezes the entire move. So you're going to find once in a while, you're going to get a kick. Those kicks are fine because then what happens? It takes every trade that is valid. All three of those were valid, but the difference is that I basically had two little teeny kicks. The third kick was wow, boom. And the whole point is that we take the whole move. Like instead of me going guessing, oh, I should have a target here or I should have a target there, I take everything. And what's really cool is the software is going to take the trade before everybody else is in. And I've traded this manually, so I know how hard it is to try to enter on every single trade. But what's really cool about the algo is that you can literally do you can do some really big damage. Like the money you can make with this is just beyond. It is. Frank says it looks like the Holy Grail algo. I don't want to say that because it's really not compliant for me to say that, Frank. But I will tell you that it is a game changer. Yeah, it's a game changer. Yeah. No, so you can say it all you want. I just can't say it. You needed this today in pre-market. Yeah. Well, let's talk about this. So we have templates built. So this is the template that we have on the NQ. And this is basically the NQ. So you can see here, like it's just straight up and it's very clean and it's very profitable and there's no issues, very high profit factors, very big, very, very solid track record with regards to strength and how we do this. But we use the body break method. And so the body break method is going to get you in, it's going to ratchet your stop loss. We built a template for the S&P as well. It's just straight up. It might go sideways for a day if, let's say, conditions don't move and you get a very small, slow moving market. But what's important is that you're going to basically, you might have stagnant, you might have a day where it just doesn't do anything or you don't trade. That was a holiday. But look, you're going to have situations where the market might just be really dead or like you don't get a lot of follow through or holiday. And then bam, you get big, big movement, big, big movement. So when the market is moving, you literally just capitalize on the movement. Lorenzo says, what size prop account would this any prop account, Lorenzo? Because the trade management can be set up based off dollar value risk. So what we do is we allow you, there's a setting to say risk $50 or risk $100, and you do it on micros. You do it on micros, and you can basically risk whatever you want from one micro all the way up to whatever, and you can ultimately do this on anything. Yeah. And here's an example on the RTY. There's templates on the RTY. Yeah, this is works on anything. Yeah, you can do this on minis, you can do this on micros. There's no issues. Yeah, absolutely. Yeah. So see, do you use leader? No, I don't use any type of correlation or nothing. No. No correlation, nothing. You don't need that with this. Would you use different bar sizes? I haven't tested that, Benjamin, so I can't answer that. Um, yeah. So I'm going to do a giveaway now. So I'm assuming my team's been prepared ahead of time and it's got the link for the giveaway. Let's get that in the chat box and let's get that cooking here.
You got it coming up.
So we're going to do a software giveaway here. If you've got Lady Luck on your side and you're moving in the right direction, hopefully. How many of you guys are excited for this? Like, this isn't even a sales presentation. Like, this is more like if I'm able to help you guys change your lives, like, I really, really believe that this is. Why would you want to trade any other way? Like, I just don't understand it. Like, when you know you have something so successful, like so successful, it's just beyond comprehension. I get there's people that are going to doubt it, and I get there's going to be people in here that are going to say, well, maybe, and sure, I've heard them say this before. Maybe there's other algos. No, like we couldn't do this before because the other algos are not they're not the same. Like the way they're designed are not the same, right? So there's a link in the chat box, guys. If you click the link, fill it out. We're gonna give a free license away. I want to just give back to everybody, right? Everybody see the link? Everybody see the link in the chat box? Just click on that link, fill it out. Do you see better times that works? Scott, it's just any session. Like, any session that moves, right? You've got the London session, you got the US session, you got the Asian session, right? So I just feel like if you want it to make you money, just you need movement, right? Like the market has to move, right? So ultimately, if you want trade on the Nasdaq, trade on the Russell, those two markets move heavy, right? The S&P is great, but like, trade the Nasdaq, you'll be fine. MNQ is great, and the Russell's fine because it always moves very heavily. Russell doesn't move much in the overnight though. Like it's the Nasdaq moves more right in the US session, right? Brian, we've already set everything up. So tomorrow we have an AMA. We're gonna do a settings presentation where we just go through the settings in the webinar and just show you how to set it up and how to trade it. Um, it would be very, very good on the DAX. I just don't have data on the DAX, so I haven't tested it. Yeah, the DAX is like that market moves, man. That market moves, right?
Ready for a
Absolutely.
winner?
Absolutely. Winner, winner, chicken dinner. Yeah, thank you.
Winner is Chad Sinclair.
Damn, Chad, man, you on point today. You're doing great. Everybody, congratulations, Chad. Congrats, Chad. Are you here? Hopefully you're here. And you can say you're here. Just let me go. Let me know if you're here, Chad. Chad Sinclair. Yeah, hey,
There
you
you go.
won. Yeah. Are you excited, Chad? Do you win? Hey, excited. Tell me you're happy, man. Does that make you happy today? Yeah, I hope that makes you happy. Totally. You're excited? Great. I'm really, really happy about that. Really, really happy about that. Great. Fantastic, man. Great. Great. Even my dog's happy for you, Chad. He's barking like crazy over here. Right. Fantastic, man. I'm super pumped for you. Proud of you guys. Listen, I just know what it feels like to win, and sometimes anybody here that feels like you don't win, don't ever think like that. Never think like that. Always be happy for the person that won. That type of energy attracts abundance. So that way, the next time, if you got someone wishing for you to win, that's all that matters, guys. It's all about giving back and helping people, right? So listen, couple things. This is a launch, so we always give big discounts on the launch, and this to me is a super 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 profitable trading system. Okay, I know that because I've traded it, I've seen what it can do, and anybody in here that was in the boot camps, for those of you that spent money on the boot camps and you paid for those boot camps, you have an additional coupon. Can you speak to that, Pete? When we go over pricing, did you guys email out the coupons to the trifecta owners and the PST Velocity Bootcamp people?
Yep, that went out about 20 minutes or so ago.
Okay,
Yeah.
so if you were in the Trifecta Boot Camp or the PST Velocity Boot Camp, can you put a yes in here? Type a Y in the chat box. If you were in one of those boot camps, you paid to be in those boot camps, put a Y in here. Every single one of you has been sent an additional coupon. For whatever reason, check your spam folder, any of your inbox. Make sure, because you guys have paid for additional education, and so we made a promise to you guys that when we launch this as an algo, we would give you guys an extra coupon. So you guys have that. Can you guys do me a favor and type a yes if you guys got the coupon? I want to make sure that everybody got the coupon. You did? Yes, but I did not get the coupon. Okay, if you did not get the coupon and you were in that event, any missed coupons, send an email to support@tickblaze.com. Okay. Yes, the coupon was mailed today, Ben. Coupon was mailed today. So if you haven't checked, it was in the spam folder, Jeff. Okay. Make sure you mark us as a safe sender. That's important. Very, very important. Okay. So what you need to do is you need to make sure you check the coupon, and that why? I mean, who doesn't want to save a bunch of money, right? Like I know my wife, when we go shopping, she likes to save money. Like I do not get to buy anything unless it's a discount. Okay. right? So we got to make sure you guys are getting all the discounts. Okay, we're pulling out all the stops. You got it today? Okay, great. So with your permission, is it okay if we go over the price now, guys? Can we go over the price of the algo? I want to explain everything and what's going to come with it and all that. You guys good with that? Because I've done a lot of talking, but let's make sure that you guys can get everything and you guys understand what's included. Okay. So this is a launch. So what we're going to do is we're going to drop the price. I'm going to explain this. The auto div algo is not just a divergence tool. There's a lot going on with it. So we're going to explain it. First of all of the algos come with the algo engine. This algo engine allows us to do things that you can use like the trailing stop method. Without the algo engine, I can't implement the method for trailing stops. So there's a trade management engine inside of the signal generator that is a part of the software. Also, all of the other testing that gets done it's in the engine. Then there's ultimately the algo itself, which is the signal generator. There's two components to the system. Then the third part is all of the pre-built templates. We've built all of the templates for you. We've got all of the templates for the NASDAQ, the S&P, the Russell, everything. So all of that is pre-built, and so you don't have to build it. However, if you want to build more templates or if you want to do it on other markets, then you're going to want to come to tomorrow's VIP event. Everybody that has the software and everybody that's participating is going to be able to come to that. During that event, we're going to go over how to set it up, how to turn on the money management, how to make sure that the templates are working, how to make sure you understand everything about the software. Yes, we'll be going over how to build it, how to deploy it, how to test it, all of the settings. Plus, there's documentation. And for anybody in here that's new to algo trading or new to Tickblaze desktop or just new to the entire aspect of using Tickblaze or using automated trading systems, we have a white glove service. We will log on to your computer personally. All you need to do is book it. You need to ask for the help. If you don't ask, we can't help you. So all you need to do is do that and make sure that basically you guys do that. Okay. And so one of the things you want to do is just send an email in and request support if you have it. Now, normally all of this stuff is about 10K. Most algo trading companies out there are selling big packages between 5 grand, 10 grand. Some of them are selling like 20 grand a system. We don't do that. Our pricing is much lower. We try to be a volume-based company. We sell a lot more than most companies. We're bigger than that. So we drop our pricing. And ultimately, the price is lower. Then what's going to happen is that all of you guys that got a boot camp, you guys plus an additional coupon. So I think, Pete, it's less than that, correct? If you have an extra coupon, it's less. So you should have an email, like I said, and then that's it. And ultimately, you won't have to pay for that. So this is the price of the system. The concept of this system is a lot more to it. There's a lot more going on in type of this strategy. And there is a maintenance fee. I think it's important to understand that we don't charge maintenance fees for the product. We charge a maintenance fee for the store. So if you're anybody from the past, if you've already purchased products, you don't have to worry about that. Your fee is already earmarked to what you're under the old model. Anybody that's new in here, this is the fee. So if you're brand new and you've never bought a product from Tickblaze, it's important that I explain this moving forward. If you're a brand new customer and you've never purchased before, just so you understand that the marketplace, we have a marketplace of tools, indicators, algos, strategies, everything. We charge a maintenance fee, and that maintenance fee is so that we can keep all of the products up to date, bug-free, updates on the platform, etc. We don't do updates. You don't pay for updates. You don't pay for new versions. You don't pay for additional licenses. What we do is we charge a maintenance fee for all of the store. So if you end up buying one product, or if you buy 20, it doesn't matter because we only charge one maintenance fee and it's annually, and you ultimately get your first year free. So you don't have to pay this today. It's free. It's all part of this. You don't have to worry about paying this today. You'll get an email in 11 and a half months from now saying, hey, your maintenance fee is due for all of the indicators and the strategies you've purchased. Okay. And that's just a policy for us to be able to ensure that all of your software stays up to date and everything like that. Right. So, it's very inexpensive. One trade, you've paid for the system. You have one winning day and you've paid for the strategy. It's that simple. Okay. Now here's the detail for the AMA. It's tomorrow. Okay, tomorrow you're going to basically have a training session. We're going to be going over the algo and we're going to be going over the settings. Jeff will be hosting that. It's tomorrow at 12 noon Eastern. Please correct me if I'm wrong on that. Can you guys verify that that's the right time? I want to make sure that 12 noon Eastern is the time tomorrow. Is that correct, Jeff and Pete and the guys?
Yep, 12 noon. You got it.
12 noon is the time, guys. Make sure you're there. If you can't be there for whatever reason, we're recording them. You'll get it. Don't stress. We'll make sure you have it. Okay. Yes, you can use this with prop shop accounts. Absolutely. You can use this with all prop firms because there's an on-off switch inside of the software that allows you to turn the algos off, which means you don't have to run the fully automated system. You can step in and intervene, so to speak. Does that make sense, guys? Now, for those of you that don't know, Tickblaze is an award-winning platform. It's free. You can download Tickblaze for free. You don't have to pay for the platform. If you don't have a data feed, you can buy data, or you can go through one of our prop firm partners like Prop Shop Trader or Blue Sky or Elite Trader Funding or any. I mean, we're just launched. Goat Funded Futures is coming. We got a whole bunch of prop firms launching on Tickblaze. However, you can go through a prop firm and they give you access to a data and you're all set. So you don't have to worry about paying for the platform. So if you're on Ninja or if you're on TradingView or anything like that, you don't have to worry about buying the platform. It's free. You guys are all set. Okay. So what I'll do is I'm going to just leave this open here now. I'm going to run a poll. Why? Well, because we need to. So just bear with me for a second. So what's going to happen is after the webinar, my team is going to reach out to you to try to help make sure you get everything you need. What I need from you, okay, is I need you to let me know if you're buying the strategy. If you're purchasing this system, please put a yes. If you need help, please put your phone number in. The reason I need this information is we need to be able to send you all of the resources. We need to send you all of the details. We want to send you the coupons, the details, the layouts, all of the resources, right? So if you're going to be using this and you're going to be buying this, we need to know. So please put a yes if you're purchasing the system. Yeah, the ebook will be sent out to everybody, Jared. Yeah, the ebook's going to be sent to everybody that's using the software. Yeah, because you'll have access to that. Yeah. So please put a Y. Please put a yes. If you need to speak to our team for whatever reason, maybe you want to talk to us about questions, if you have any concerns, or you want to get clarity, or if you just need help, please put a yes and then put your phone number in. After the webinar, Jason and my team is going to follow up with you. And they're going to contact you. They're going to call you, but we can't call you unless you help us. Okay. So please do me a favor and make sure you put a yes and your phone number. If you don't put a yes in here, we can't help you guys, right? We can't help you. I need to make sure that you put a yes in here. So just do me a favor and take a second, Phil. It's either a yes or a no. And if it's a no, that's fine. Hey, not everybody's ready to buy something today. We get that. Not everybody has the bankroll to be spending more money today. Hey, come next week, come next month, maybe it's better for you, right? But if you're somebody that wants help, or if you're somebody who wants to speak to our team, please put a phone number. And then if you know for sure you're buying, put a yes, because the discount's only good for 24 hours. After that, it's going up like five to 10 grand, guys. So like, do the math, right? You get a money printing machine for $1,500, $1,700, and like that's it pays for itself. One winning day, one winning trade pays for the system. That's simple. This, you can pass prop accounts fast with this. Yes, you can use it with Sprint. Yes, you can use it with the Forge accounts. You can use it with any trading firm, to be honest. Even if you're trading using Rhythmic and you're trading with any Rhythmic supported prop firm, Tickblaze connects to Rhythmic. You can trade any prop firm on Tickblaze, right? Yeah. Great. We don't work with TradeAvate. No, TradeAvate's a broker. We're not connected to. I did reach out to NinjaTrader and the guys though to see if they wanted to connect to our platform. They're picky. They're really picky on connections, and also one of the things, because we work with prop firms and we promote prop firms on our tech, I think they kind of see us as a competitor. So I don't know if they're going to want to work with us, which is understandable. Like we're onboarding prop firms and we work with a lot of companies, so I can only expect that's the reality, right? Like not all. We're kind of like a competitor to them, Ian. Yeah, yeah. Simon, we can't talk to you if we can't help you, right? If you want to put your email in there, sure, we can email you. It's not a problem. Yeah. Yeah, competition's healthy. A little bit of discipline goes a long way. Guys, please fill out the poll. It's really that simple. It's either a yes, no, or please call me. The call is to help you. We're not going to bother you. We're going to ask you some questions, make sure we can give you the right information, help you along the way. And we don't do cold calling. Like, we're not in the business of being a pain in the ass, right? We're not here to bother you guys, drive you drinking. Like, we get it. Like, it's either you want it or you don't, right? But I can promise you this, you're going to be excited when you use this. Yeah. You got, yeah, post a link to purchase. Can you guys put the link to purchase, guys? Keep posting those, Pete, every couple seconds as the chat goes up. Yeah, we're doing we're Q2 comes in July, sharpshooter. Yeah, absolutely. So yeah, we're just right around the corner on that, brother. Lots moving. Yeah, we just brought in M&A bankers to help facilitate the VC raise. We're cruising. Just been drinking from a fire hose, man. Yeah, and it's my birthday today, so I'm going for a steak dinner. I'm gonna eat a lot of steak. I'm gonna have a good night's sleep, and hopefully, hopefully crush it. Right. So my wife brought me cupcakes with this icing on it, and man, they were good. So I was like super excited about that. Hey, thanks, guys. Appreciate it. Yeah. I would rather, if you were to say, what do you want to do on your birthday? I say, I want to have dinner with my wife. I want to say hi to my family, appreciate the love and gratitude in the world, and then spend the rest of my day with traders because I love trading. There's nothing better in the world than being around a bunch of traders and talking about the things we love to do and being able to do what we love to do and make money, right? What a gift, right? It's a gift. Hey, thanks, guys. I appreciate the blessings. Yeah. Yeah, there is a discount, Robert. If you're a bootcamp member, you would have got an email. Check your email. There's an additional discount in there. You'll get that discount. And thank you for the birthday wishes, guys. Appreciate it. Anybody that didn't get the coupon in their email, check your spam folder. If it's not in your spam folder, email support and let us know. Make sure you do that right away because you only have today at that discount. Okay. And good congratulations to Chad for winning, brother. You're is a very good algo to win. It's a very good algo to win. Exactly. Please do me a favor. We got about 63% of you have answered the poll, guys. Help me out, man. I'm here to help you. I can't help you if you don't help yourself, right? It's either a yes, it's a no, or it's a put your name in the chat and we'll fill out the form and we'll basically call you. Make sense? And like I said, the proven strategy is key. Like, I've traded this myself. It's profitable, very profitable, but it's the custom trade management that that really allows us to throttle the strategy, right? It really does allow us to throttle the strategy. Yeah. Super exciting. All right, guys, listen, have a fantastic day. Thank you for joining me. Appreciate your guys' attendance. Appreciate you guys just giving me time to explain the awesomeness in the strategy and all the work that's gone into this. If you have any questions, make sure you save them for the AMA tomorrow. And for everybody here that put a yes in the chat box, make sure that you follow up and make sure you purchase using the link today because the discount expires at midnight. And also anybody that's requested callbacks, make sure you're available right after this because my team's going to call you within the next hour. Okay. So thanks, traders. Have a fantastic day. And, have a fantastic day trading, guys. Be good. Talk soon.